So we'll go ahead and start the stream now. Now we'll just go through the current assets, what is going on, and then we'll go ahead and answer questions. So starting with gold here, I am still looking towards this low personally, depending on how today closes. I would prefer it not to close over this, and we will go over that. But if we take a look, we'll replay this. If it loads, we have a candle 2 closure on both sides of the range here, right? But for me, aggressive move up, aggressive back down. I'm viewing this as a retracement to look lower. And so then we do get a move lower. However, we don't finish off that previous day low, right? So then just viewing it as we have swept out liquidity on this side of the range, but not on this side of the range, my mind favors looking lower still, right? Then now we have equal highs on both sides, right? And so that's why last night in my analysis, I said I favored for price to reach up to this high. Now let's drop to the lower time frames on why I said that. Because we have it on both sides of the range, and it's a very simple reason to why I would prefer the highs to be swept out first. So all it has to do with is where we're opening to, right? Or like what one we're closer to. So for instance, if we're opening right up here in the next daily candle, is price more likely to reach right here or to go all the way down here, right? Almost twice the distance. Versus if price would have opened down here, is it more likely to reach for this low or to go all the way up there? So that's why with price opening up in here, right, a lot closer to these highs than these lows, that's why I was favoring price to reach for these equal highs up here. So then when we open, right, here's where we get that little intra-candle change in the state of delivery. Granted, there's no valid fractal model, but still the same idea applies. That would have gotten swept out. And just consolidation, and then we finally go, right? So it's just very messy, and they're not something I'm wishing to be participating in, right? As you could see, if I tried to trade that, would have gotten stopped out. But does that make sense why I was looking for these highs versus these lows? And now that these highs are taking out, depending on the closure, I would be still looking towards these lows, right? The only thing is, to get a valid change in the state of delivery, we'd have to go close below there, which makes it not super favorable to look for shorts as you're already right here and the risk to reward is just skewed. So I would prefer another sweep of a high if that was to set up. Really, there's nothing that I like here because I don't trust these highs here if we're going to sweep that to not get taken out. But I still want these lows ran out. So any questions on gold there? Let me look. Now the recording will be posted on the WAP. What about the highs on the left? Yeah, so the highs on the left, that's why I'm not a huge fan of this at all. This is just a consolidation range, right? That's all it is. So generally on what I do on this is I just set alert on the high and low, and then I look to do something with that. I was just seeing all the scenarios that could occur, right? Because we still did sweep out this little consolidation range. So we could go back to the other side of the range. It's just consolidation, right? So it's not really anything interesting to be trading. You know what I mean? You can't hear anything? Can someone verify I still have sound? If you can't see anything, make sure to click on the stream. If a swing formed right here, you wouldn't take it. I would not personally. Like, I am not interested in trying to trade this right here currently, right? The only way I would possibly consider that is I see this as a consolidation range. We're at the high of it. I would have to go to the lower time frames, like a 15-minute, to try to find a setup in there, but that would just be trading back into this range EQ, so which I'm just not very interested in that. I prefer to trade expansions because it's a lot easier. So nothing really there for me. All right, cool. Sound is still good. So yeah, Edward, those highs on the left, that's what makes it, I'm not a fan of this, right? And really that's all this is consolidation. You'll see how hard is this to trade versus something that's actually trending. You know, like I think even silver is moving, right? That's a lot easier to trade than gold, right? So, granted, that is not really ideal for that move higher. I know someone had a question about this. I'm going to get to it, but ideally in expansion, if we're going to expand higher, we're going to respect 0.5 of this. However, we notice if we add another candle in here, right? This is candle 1, 2, 3, 4. After 4 candles, the fifth, it's less likely to be looking for setups. Granted, the reason we got some range today is, see how the third candle just more so consolidated or formed a reversal candle? So on a lower time frame, we're going to have another swing setup that's right in here, right? Or from here. But this stuff, this is a lot easier to trade than ranges, right? That's the whole reason my model just focuses on expansions. All right, let's see. Time to tilt both sides on gold. When do you get a valid setup for one shot, one kill? Or do you always drop to the 5 minute for your entry? Or do you just take the 1 hour? And do you need your indicator to paint the same setup before you get in? So, one shot, one kill. It's more so about the context and the higher time frame narrative than the actual just like pattern trading inside of it, right? So for instance, if we were bullish today, right? If I'm bullish today and I'm expecting silver to run higher, right? And I see us drop down in the overnight session, sweep out a low, right? And I'm still bullish, I can use the daily profile to get in lower here on the 5 minute, right? Or without the fractal model in there. Or I can also wait for, okay, here we have an ideal candle 2 closure. And then I can look to get in here on candle 3 for this expansion, and then candle 4, right? So it's not, there's no direct path of you have to do this and you have to do this. It's more so about I have a daily bias. I'm expecting some sort of expansion or some sort of move. And then I'm looking to get on side with that with the right timing, right? And that can be either with the foundation model in the daily profile. That can be a lower time frame entry with a higher time frame closure, like in here, right? Or even it doesn't look like I'll have one in here, but after I have this hourly, right, set up, I could go to the 1 minute or the 15. And if we have a swing on the 15, I can then refine it down. There's lots of ways to get into that. You know, you could even just take the 15-minute setup, right? It just depends on what you prefer. Does that make sense? And then let me, dumb question, but what's the indicator using to show the higher time frame candlesticks? So that's the power of 3 indicator. I have my own indicator. This was just set because on the daily chart, I just like to see the EQ of previous day, and it has that on there, and then I haven't adjusted it. But I am going to get that added to my indicator so it can always show that no matter what. But that's just the power of 3 indicator. Should be, yeah, Kim got that. In your video lesson today, you mentioned that price went from consolidation to reversal. Which lesson do you mean? I don't know. Or if you can send your lesson chat today. I don't think I posted a lesson in chat today. I have been packing stuff up today, so I haven't really gotten to do much. If you can find me a screenshot of that or where I said that, I can explain it. Speaking of one shot, one kill, do I need to use it in confluence with the fractal model? So what's the only learned model, which is the fractal model? So the whole thing about the fractal model, right? We'll just use silver as an example. This is a valid setup for the fractal model because we have swept out a low, or that is our point of interest. And then we have a candle 2 closure, in this case, an ideal closure. Why is it ideal? Well, this candle closure here closes over the down close series of candles that made it. In this case, there's a singular one, which also validates the low. So the closure also validates the low. That's ideal. So this is a fractal model setup, right? The only thing that makes it one shot, one kill is like when you combine your daily expansion candle with this, right? But no matter what, I want to be having some sort of higher time frame narrative. I don't want to just try to trade every single swing, right? If I try to trade every single swing in here, right, it's likely not going to end up super well, right? Because you'll see you get a lot of false signals or you get a lot of chop, right? You want to have a higher time frame directional bias, right? So I want to see if I'm looking for longs or shorts, right? And how do I do that? From the higher time frame or just zooming out and using the trend, right? And then from there I use the point of interest. So a lot of people fall into the I'm just going to pattern trade this, and then that's where they get caught up because they see, oh, this is the pattern, right? But you want to have that with some higher time frame context. Yesterday's post. Can you screenshot it? Because I don't know exactly where within that post. Because we didn't go from consolidation to reversal. I can pull it back up. We'll go to that. So if you guys go into my TT lessons section in the Discord, I'll drop random videos just going over certain things I see that will help people. And this is the one I posted yesterday. Let's go in here. We'll adjust the indicator. So the main thing is, I'm just going to switch this to 1 and bullish. So the main thing is here we have a candle 2 closure that is bullish, right? You can see we have swept out the previous candle's low, closed back inside the range. Now here I want to use the EQ of the candle wick, right? Now the indicator will plot the whole entire candle, and that's just because of how it's coded currently, and we are working on the logic for the wick versus the whole body. But if price is going to continue higher here, I'd want to see it expand higher in candle 3. But with making this big of a wick, it's not that likely to expand, right? So you can notice we go higher first, sweep liquidity, and then we come back into the range. So what I was talking about is here we have a reversal. Generally within my model, I want to see a reversal and then trade this expansion that follows. Since it consolidated, if my bias remains, which it's not closing below here or 0.5 of that wick, I still want to see price expand higher, right, to finish off this daily target to our left. So if it is going to do that, it's going to do it after the consolidation ends, right? So reversal into consolidation. So expansion met with expansion, consolidation. We're not really going to reverse from consolidation generally. So then we get this expansion back higher. And what I talked about is here we sweep out a low, here we get the closure over. That is when the open of candle 4, it does make sense to take it long, or this entry just missed. But if this would have tapped into the fair value gap, or maybe ES did it, formed an SMT, this is a valid entry higher as then we form something like that, right? So maybe if you can clarify your question, exactly like on what you are asking there, and I can give you a little better answer. Yes, WAP. The stream is recorded every time, and they are all in the saved recording section of the WAP. Okay, let's make sure I didn't miss anything. Asset-wise on the chart, NQ is the cleanest, ES less clean, but you'll still trade it. Just curious, not YM or 2K. So the reason I don't look at YM is mainly I don't think the correlation is good enough with ES and NQ to really consider it. It's kind of a separate asset most of the time. If you notice how it normally goes is if ES or if NQ is going up, ES will kind of be in the middle, right? And then the Dow will be going the other direction, right? Very rarely are they all moving in the same direction. So I'm not looking at the correlated asset with YM. I'm just focused on ES and NQ. And that's just something I've found with my experience. If you want to use YM, that is great. You can go ahead and do that. I just don't. Trading into 0.5 of previous day didn't bother you on silver. So that's why I was saying it is not ideal on silver. Because generally, that is our 4 hour. Go to our hourly chart here. If you notice, this is candle 5, which my model doesn't look at. But if we're going to get expansion, generally we don't want to see it trade below 0.5 of the previous day's range. But if you noticed, we didn't get expansion, then expansion, right? We have this kind of consolidation, move higher, then it retraces to this down close candle, right? So it's not super ideal within my model because my model focuses on candle 3, 4. This is 3, this is 4. My model doesn't even look at this day, right? But what you're talking about is when price goes below 0.5 of this, we'll go into here. When price goes and closes below 0.5 of this previous candle, yes, that's less ideal, right? But when you pair it, if you have the higher time frame bias as up and we sweep out a low, I'm not trying to catch this low, right? And when something like this happens, I just think to myself, okay, we just had expansion down. What is it met with? Is it met with a retracement, which then I'm expecting a continuation lower? Is it met with consolidation, which then, sweeps out one side of the consolidation, goes lower? Or is it met with expansion in the other direction, which then I would be considering that a reversal, right? So then I look at the next hour. What do we see at the next hour? Expansion met with expansion, creates opposing candle. That's when I could anticipate a move higher, right? So it's just blending the phases of price. It's not ideal that it went and closed below 0.5 of the previous day's range, right? But it's still getting supported by these previous lows over here, right? So this whole series of down close candles. I'm new here. The numbered candle system you're using now is your fractal model. Correct. It is the fractal model. Let me pull up a screenshot of this and we will go over it for you. If it can load it into my trading view for me. And the image is too big. Let me see if I can screenshot or let me see if I can screenshot less of it. We're trying here. All right, cool. So thoughts on this candle 2 closer entry candle? No ideal formation, no CISD in candle 2. Okay. Let me see if I can find. So one thing I'll say is when you guys share these, if you can have the higher time frame candles on the side as well, it's super helpful. I can go through and visualize this, but at least for other people, maybe I'll draw it out on the side. Right, so I'll draw it here. So that way people can see what it looks like. And I should have drawn it a little further away, but yeah, we'll move it. Right, so oh, my lines are messing up with that. Yeah, there we go. So this isn't super ideal, but essentially what it's looking like is this formed a small little down close candle that got closed over, and then we come back and retest it and move higher. The reason I'm not a fan of this candle 2 closure is generally what I want to see in the structure of my model is if we have, this is candle 1, candle 2, I want to see sweep out and have a reversal candle, right? So that usually is like a little hammer candle. something like that. And then I can look to trade this expansion candle on the next one, right? But if we notice here, our candle 2 is essentially from here to here, right? Taking out both sides of the range. And that's what it was making this little candle that looks, my bad, like this, right? So I would not really be focused on trading this in candle 3 here, but within candle 4. And within candle 4, I want to have generally a point of interest. So you could consider this. I wouldn't consider it because of this. I would consider it because of this. But the reason I wouldn't really be interested in that is I want to be entering near and around the opening price and at the beginning of the candles, right? Because allowing myself to enter at the beginning of the candles allows me to catch the expansion higher. Versus if I'm entering this late into the candle, I'm already halfway through the candle, and you see we're entering above old highs, which I'm not a fan of, right? Versus over here, we sweep out a low, then we close over. This would be more interesting to me. So I wouldn't really like to take this personally. You didn't take because no CISD in candle 2. Yeah, so I would say focus on the higher time frame closures and what those candles look like versus the lower time frame structure. Focus on the higher time frame, then go to the lower time frame. Don't focus on the lower time frame, then try to make sense of it on the higher time frame. I don't know if you have a photo of the higher time frame candles there, but let's see. NQ this morning. Let's see. I have been packing all morning. I don't think I probably wouldn't have traded this. Yeah. The reason I'm not trading this is I am not a fan. Let's go to the daily chart. My model focuses on trading after swings, right? So if you notice, we form a swing here, right? Candle 2. This is technically 3, candle 4. So this is the candle that I like to trade, right? And then we're super close to this drawn liquidity, so I can look to trade this candle. I'm not a fan of entering on candles following 3 days of expansion or a move higher, right? Because that's when I can get caught in a new phase of price delivery, especially after sweeping out a high, right? So I could either sweep out this high, do a little retracement, reversal, consolidate, right? I don't really know what's happening here after we take out this high. Now, the main reason I wouldn't be interested in it is I can't really draw a daily profile from this for myself. Because if you notice, we don't really form any established low here, right? In Asia, we can't either, right? Like Asia can't even reach into here to then form a wick, really, right? We just open and then we're just trading higher, right? Just making a bunch of failure swings. So yes, I possibly could have tried to do something in here, but I'm not going to trade this because I don't trust any of these lows in here, right? Like I always think of my entries on the higher time frames, right? So for an invalidation, where would I put my invalidation here if I'm entering in New York? Oh, we're on replay, so there we go, right? I wouldn't trust entering in here, right? Because we have all these failure swings. Sure, I could possibly look into here, but it's just not something I'm interested in because I'm trying to enter around or near the opening price. Or if I'm entering away from that in New York during a continuation, I have some sort of drawn liquidity that I'm reaching for, right? This is kind of just straight up for me, and I'm not a fan of that. Hopefully that makes sense, JR. Let's see. But why not trade YM by itself? I just don't have an interest in watching YM, personally. Your silver chart does not look like that. I'm not sure. Do you have daily settlement turned off? See if we go to silver here. Go to our daily. I have settlement turned off. And I'm on silver futures. Not really sure there. And then yes, the question about expansion into expansion as a reversal is yes, because how do you form a reversal or a wick? right? You have expansion in one way and expansion back in the other way, and that's what forms a reversal, right? And generally, I like to see those reversals form at a swing high or low, right? Reversals, I look for at swing highs and lows. Retracement, I look for going back to fair value gaps, expansions, order blocks, right? And consolidation, EQ of a range, right? That's how I view price. On NQ, yesterday we validated 15-minute order block and expansion happened and a day overnight hit -4 to 4.5. What do you look for today? I'm personally not interested in today. It just doesn't meet my requirements. And I also have a lot of outside factors in life going on this week, so I'm less interested in price because that's when I'm more likely to make mistakes. But I'm not interested in this. Yesterday, right? You can go back, talked about this, but very messy in there. But once we close over there, right? This makes sense to me, right? And that I would consider why, because these highs are left intact still, right? That makes sense. Trying to long this above old highs just doesn't really make sense to me. How long did we start? We start these at noon EST. They're usually around an hour or so. It just depends how long I go for. And then they're all recorded and posted in the WAP. Can you look at my CL setup today? Is it valid? Sure. Let's go take a look. CL. So the first thing we want to look at is our daily chart, right? So that's where we're going to establish a bias. And this is, we started about gold and then I didn't even get into the others. But if you go back into my analysis, I was seeing if we were going to go lower on this day, right, this next day, right, you can see we swept out this low, but we also have more of a bearish candle pattern as we're still respecting this candle. So I don't really have much bias, but I was saying if we're going to go lower, we're going to respect here. If we don't respect 0.5 of this, then we're going to go higher, and then we have highs, right? So on the next candle, we decided to do it all at once, right? Now with this, I was talking about it, we're just kind of in this consolidation range, right? You see, we're just sweeping out lows, right? So really we have previous day high here, and that means mainly so just previous day high. So that would be my idea, is if we're just going to go up to previous day high. I don't really have interest in trading into or higher off of this if this is already taken, right? So it's like if we drop lower, sure, I can long to previous day high. If we go and take previous day high, then there's more interest trading back into the range for me, right? And that you can learn from, if you go look at AM's wick section in his course, it's pretty good in there. So if we notice, don't need an alert, what happens? We have mark out our previous day high, which is our point of interest here. We're sitting around here. Do we view this as a consolidation? I would, right? Just a consolidation range. And so with this, we go and take our previous day high, right? Now, if we are going to trade back into the range, what would we have? A entry sequence or a change in the state of delivery or a reversal formed up here. Do we have a reversal formed up here? We do once we close through this up close candle that makes it, right? So if you were awake during London, you could possibly have taken this. This is also a valid entry long, right? If you're still bullish, I personally wouldn't be, as my target would be previous day high. We already checked that out. But if we go over both of these, right? And then we have another candle 2 closure here, bearish, right? So with your entry, you were trying to trade 730, that one in here. So we can go take a look at that. So let's go ahead and replay. The main reason I wouldn't be looking long here is just huge consolidation, broke out, came back into the range, but we already take out previous day high. So I don't really have any upside objectives for me. But with this, right, you can see we had the bearish setup, right, from that swing high. But right here, one thing I wanted to talk about here is generally in a reversal candle, I want to see price aggressive down, aggressive back up, which we have here. But what do we notice is we can't close over this, right? We struggle to close over it. So when we struggle, we go back lower, then we trade higher. So yes, this is a valid long setup if you want to long it in here, which I think is what you did. But you also have to look at the higher time frames and the bias. When we're taking out this previous high over here, and let me make it clean for a second. We're taking out this previous high over here. What is that? That's a higher time frame fair value gap on the hourly, right? Right, somewhere in here. Right, so if we're gonna get a continuation lower, that's where we'll normally react from. So with this, if we're going to move higher, I don't want to see price close below here, right? So if you're long, you don't want to see that. Right there, I'm already invalidated. So it's a valid setup mechanically to long it, right? As we have swept out lows in here and then traded higher. I'll go back to here, right? It's just the main thing as, what do we notice? Previous day high was already taken, right? So that's not ideal for that setup. So I would say here, don't focus so much on just the pattern, but focus on where is price actually going, right? On the higher time frames, because that's the most important part. Hopefully that helps. Let me get to the next one. Do you have recording of live trades? I'm finding it difficult to understand the fractal model and seeing a few trades process start to finish. No, I haven't gotten to record any. A lot of times I'm traveling around, and so it's on my phone when I'm trading. But if you go through the recorded live streams or the trade section or even the examples, it'll start to make more sense. It also just takes a few days to learning it. Do you ever use double purge theory or OTE in your trading? No and no. I don't use either. Everything that's in the course, that is all I use. That's it. Can you please check out GBP JPY? I took on the daily hourly. It was a gain, but I'd like to hear your thoughts. Sure thing. GBP JPY. GBP JPY. Go forex.com. Said daily hourly. So cool trade there. I'm assuming you took this long. I'll double check in a second. But if you notice, we have candle 1 right here, making a move lower. Candle 2 sweeps out this low, and you can see we get an aggressive move lower back up. I'm not a fan that price didn't just go and close over this, but that is fine. In the next day, here we reach into sweeping out this low and to a point of interest or fair value gap. Right, we also have that fair value gap in there, just right there. And then we close over, right? So this would be our intra-candle change in the state of delivery, in which I could take a long on the close, I stop on this low, or at least below mean threshold of this, and then target there, right? With this, I'd probably move my stop to the low of here, so I can get about 2R at that target. Let me take a look at your trade and how you did it. So let's see. Take a photo, put it on here. So reviewing yours, same thing here, right? You have it marked out correctly of, let me move this lower. Here we have that, and well done marking out that sharp reversal or the V shape. That's what we want to see forming the wick. And like I said, we could have had a little bit of a better close on this daily candle, but you took the entry right here, which is exactly how I would have wanted it. You took the TP right where you would have wanted it. Now the main thing, and this will be a good example of, this is when we can have the intra-candle change in the state of delivery occur at the exact same time as the CISD in candle 2 or the confirmation of that swing, right? So to look for entries, we need to have price. I'm going to go back to this chart. I think it'll be easier to draw. So for entries to be valid, we have to close over the down close candles that made this low, right? So until we close over this area here, right, there's no valid setup, right? So even though we're printing this intra-candle chain of the stage delivery, I can't go to the lower time frames yet until this occurs, or look for an entry, and that's just following the flow chart. So on this candle here, when that forms, right, then it is valid to look for an entry. Then when I'm looking for an entry, I say, oh, we also have that intra-candle change in the state of delivery that has already happened or happened in this candle, and then I can look to take that entry, right? So I would say that's a great trade. Exactly how you would have wanted to trade it. So well done. I have not taken any trades this week, and I'm not sure if I will. I am moving to Florida this week, so packing all my stuff, shipping all of it today and tomorrow, my car, flying out Friday. There's just a lot going on, so that's usually when I don't try to push myself on stuff, because that's when I'm going to lose money generally. Is it possible to add the option to mark the CISD without candle 2 close? So you can go ahead and turn those labels off. So you can see how it says C2 here. You can just go to Style, turn off labels, and then now none of those will show. Right? I leave them on for teaching purposes. But if I was going to just use this for myself, I probably would turn off labels. I'd turn off the projections, stuff like that. Yes, the stream will be recorded. It will be posted in the WAP. Not sure why there's so many people having troubles with the Discord today. Could be my Wi-Fi. I don't know. Where am I moving? I'm moving to Tampa area, Florida. So, do you only trade New York session? Yes, I almost only focus on New York session unless I'm going to take a positional entry, which then I will take on the hourly chart at Asia. When one of the correlated peers is acting weird, is it okay to trade the other pair if the opportunity presents? Yeah, sure. So something like gold, silver. That's your question there. So this is why it's important to look at correlated pairs, but it can also tell you something's a little weird, right? So in gold here, we're obviously consolidating while silver is moving higher, right? So if I wanted to trade one or the other, I think it's a fairly easy answer to see which is cleaner. And that you can see from the daily chart, right? And that's what I mean is I will always reference the daily chart, is that's where everything just makes more sense, right? So if you haven't gotten to that practice, that is something I'd recommend, because you can just view this and you say, okay, we have these failure swings up here. We just swept out this low. Let me grab that. Not sure why it's not grabbing. Right, swept out that low. Do we have a change in the state of delivery? We do. And then are these daily closures respecting? Yes, right. Although we reach a little low here, we're still respecting. Expansion, we close over this high. We retest, right? Trade through these highs. So that versus gold, where we're consolidating, right? So within those two, you can take silver, right? Even though gold's not doing the same thing. Although it's more preferred if they are moving in tandem, right? So like I wouldn't try to use SMT right now, right? Because SMT, when the assets aren't correlating, doesn't really mean much. Thoughts on gas longs? So I think that's going to be pretty similar to oil, right? So the whole thing with oil was we took our previous day high, made a small wick, so then we can reverse, come back into the range, right? So with this, I'm looking at price. I'm thinking, okay, here's our EQ of the range. I want to see price trade to around there. So if the same idea is there for gasoline, right? I'm not trying to long this personally, right? I can tell you that from the daily chart, right? I could be wrong, but we already took out our previous day high and we went open, high, went lower, right? So we go to our hour here, right? You see how we opened, high, went lower, and I'm not really interested in anything because like shorts, right? We already took out our overnight lows. This is a reversal day, made a little bit too large of a wick for me to expect expansion. So if I was interested in anything, it would be shorting tomorrow, right? If this forms a reversal day, it's not very clean, But here's our change in the state of delivery, right? If we're looking for price to respect this area, then get open high, get an intra-candle change in the state of delivery, trade back into the range. Right? I personally wouldn't really be interested in longing this, and also just look where we're at. We've swept out both sides of the range. We're just sitting in the middle of the range, right? And also this isn't bullish to me personally after taking out highs, and we might have SMT there. I'm not sure. I'm in the mentorship. Does that include your indicator? No, the indicator is separate from the mentorship. That is through 2 degrees. Thoughts on trading the day before NFP? I generally avoid, but AM's data is saying that you can also look because of the range, with some more slight caution. I'll personally be avoiding this week. Most of the, like, I don't think I'm going to take a futures trade this week just because of my schedule and what's going on. I don't really have focus right now. So there's that. But I know AM is going to be looking on Thursday, I think. Hope stream is working. Try the browser. I can hear everything, but screen won't load full screen. Is there a video setting up your trading view just like yours? I think I can make a template for you guys. I'll look into that. But I have all my settings linked in the Discord and that video that TST linked. Thank you for that. Would you be able to speak a little bit about invalidation, how you're able to take trades close to it by maximizing RR? So I think you probably saw that from someone on Twitter I was talking to, or in another Discord, but the main thing I was trying to go over with people is it's hard in this scenario. I'd need like an actual good setup for an example. See if like Euro has something. Okay, that might work. Let's see. Okay. Okay. So right in here, right? No, I'm not sure why nothing's loading. There it goes. So right in here, we're just gonna, I'm actually gonna clean up the chart and just explain to you something. If I'm trying to think of how to do this in a way that's not gonna confuse people. Let's say there's a few ways, right? So you guys know within my entry sequence section, right? Let's pretend this is in candle 3. I have a valid point of interest. If I'm looking to trade this long, the first entry is my candle closure, right? Now, what do we know about these entries? They're not confirmed. Why are they not confirmed? Well, let's go back here. This currently, which low is protected? This one, right? Because we have protected lows when we close through the series of candles. So currently, let me grab a little emoji actually. This low is protected, right? This one is not, right? But I could anticipate this to be forming a low as I have a candle 2 closure in a fair value gap, retesting this opposing candle, right? And I don't see anything lower that I would need to take out. So my highest risk to reward entry is going to be this candle 2 closure with my stop on the anticipated invalidation, right? It's not an invalidation yet. And then wherever my target is, right? Let's say we're trading to the high, right? That's how you get really high R trades. But you're going to get stopped out more. Why? This low, right, isn't confirmed yet, right? It's not an invalidation until we close through here. Once we close through here, right, still haven't yet. Now we have. Once we close through here, now this low is invalidated, or validated, right? And so that's why for most, and even me, I just prefer taking this because although I have less risk to reward, I generally have a higher hit rate on this setup because this low is valid, right? What could happen, and what happens a lot of times, is I could be looking for a long setup in the right spot, right here, right? But since we haven't closed through here, let's just say we don't get another sweep, then we close over, right? Where I would have saved myself a stop if I'm just waiting for that intra-candle change in the state of delivery instead of trying to catch a super high R trade. So like the lesson here is, yes, I can catch a very high R trade if I'm doing something like this, but I'm bound to have a not as high hit rate, right? Just because this low is not confirmed yet. So the main thing though is the way to increase risk to reward is if I have my invalidation here, right? So let's say for instance, we close over on this candle, my invalidation is here, and then I see price come back down into the middle of this, right? So it looks something like that. That's something that's going to give me a higher trade because this low's valid because we've closed over, and then now we're at the mean threshold. If I believe in this, this low shouldn't get hit. That's how I get a higher trade, right? But for most, it's better off to stop trying to aim for super high R trades and just focus on the process and something very clear and mechanical. So for most, I always just say, just wait for that intra-candle change in the state of delivery, as it's one, easier, and two, it allows you to focus and learn the process. And you can speak to anyone who's been in here a few months, or maybe even Ian or Shin or those people. After you learn the model and the process, you start to anticipate these lows, right? That's when you can start to take some different types of entries, right? Because the whole thing is this model is mechanical, but once you learn it, you can build your own discretion off of it. So hopefully that helps a little. It might be because you're on your phone, Aiden. It's a Discord issue, yeah. I'm not sure. On 50K account, how many contracts would you risk for a set dollar amount? I'm new to trading CL and gold. So I would do that the same way as I show in my like prop firm video. So essentially, there's a few ways to go about it. If it's an eval or if it is a funded account, right? But this is how I would go through it, and you got to do it for yourself, right? You figure out how much drawdown you have. So for most 50K accounts, you have $2,500 in drawdown. So that's your actual account size. You don't have 50K, you have $2,500, right? Because if you go below that, the account's blown. So you don't have 50K, you have 2,500. Then you have to decide the next thing you do. Let's see if I can grab a little arrow here. This will be good enough. The next thing you do is you say, okay, how many trades do I want to be able to lose in a row before the account is blown? So that's the next question I ask myself. How many trades do I want to be able to trade or like to lose in a row before the account is blown? So let's say this was on an evaluation, you don't really care. Maybe that answer is 4 or 5. Maybe it's 2. Maybe it's 10. Maybe it's 15, right? So let's say, for instance, I'm going to use about 10% of the drawdown, or I answer 10 to this, right? I want to be able to lose 10 trades in a row before this account is gone. So what does that mean? It means what I do is I take my drawdown and I divide it by my number of trades that I want to be able to take. So then what does that equal to? That equals to 250. So then what I would do is I'd go into my trading view and I'd set my quantity and stuff like this to 250. And then this quantity would adjust to my size. Does that make sense? I've heard Discord's been having issues the past few weeks with their live streaming. Yeah, I'm not sure. Yeah, personally, to protect my mental, I would rather have a lower RR and higher hit rate. Yeah, and that's why you'll see in the course, I just talk about 2R. And the reason I talk about 2R is so many people get caught up in struggling to learn a system and a process, and they just struggle to manage their trades. So it's like, if I'm only going to take 2R, I don't have to worry about when am I going to take profit? When am I going to trail my stops? When am I going to do this? When am I going to do that? I don't have to think about all that. All I know is when I enter a trade, so let's say here, if I'm in this trade, I don't care what happens. All I know is I'm taking my profit at 2R, right? And I don't even have to watch it, right? And what that allows people to do is they don't have to worry about how to manage the trade. They don't have to add that into their list of things they have to worry about. They just have to worry about, hey, this is my setup, this is my trade. What happens? Does it work out? If it works out, cool. What data can I gather from that? If it doesn't work out, cool. What data can I gather from that, right? Why do I use the body instead of wicks? I've always used the body for change in the state delivery. So that's just always how I've done it. Would you trust that? The close? I don't know which close you were talking about there. So a protected high or low is a swing high or low. A protected high or low, by my definition, is we reach off a higher time frame PD array, or we have a reason to be going in one direction, right? When we're in an expansion higher, I expect price to respect down close candles. So when we reach into a point of interest, in this case a fair value gap, right? And then we form and we close over that body. Now I'm considering this a protected low, because if we're in expansion, I don't expect this to get returned to, right? So protected low. As we trade higher, can we close over that? Let's go through this. We'll just go one by one. So then I'm looking, okay, we have down close candles into a point of interest. If we can close over this, we make a protected low. Okay, we made a new low. So now this can't be a protected low. Here we reach into a fair value gap. So now if we close over this, it can be a protected low. Okay, so now if, let's say I'm trailing my stops and they were here, I can move my stops to here because I don't think this should get taken out if we're going to expand higher. Now let's say we go take it out, I'm expecting price to drop lower, right? So then I'm looking, right? Okay. Now we're just consolidating. So not much to do here actually, but like that's still my protected low. And generally I will say when I start to consolidate like that and I take out one side of the range, that's generally when I just TP, because if I view this as a consolidation range and we're sweeping one side, if we go back to the other side, that's where my stop loss would be. Let's see. Where can I see the everyday updates about the price you post? So I post my analysis or my bias for gold, oil, and indices in my channel here, TT analysis. And that's usually every evening. Let's see. When past a 150K account, at what price should you ask for a payout? That is honestly up to personal preference. Some people like to build a buffer. Some like to just take the payout. It kind of depends what you want to do with the account, if you want to use it long term or if you want to just get the payout, stuff like that. Took this trade. Can you tell me if it was a valid C4 entry? I know the daily was not perfectly aligning, but previous day candle closed quite bearish, and when we had SMT on the previous day high with GU. So one thing I want to say about this is that is perfect explanation of you don't have to trade the swing point to a swing point. You don't have to have a daily swing point to go trade the lower time frames. The most important thing I try to get into people's heads is you want to have some sort of higher time frame bias, right? Whether that's just I'm expecting price to continue higher, or hey, we have an SMT here, right? Now the most easy way is always waiting for that continuation on the daily, but if you already have experience going with something like this, that's fine, like what you said. So let's go through this example here through the flowchart. If you have the flowchart on your hand, I would pull it up as every time you go through an example, just reference the flowchart. So do we have a candle 2 closure? Yes. So that is that left side of the flowchart. It'll say yes. Now what do we have to look for? Do we have a change in the state of delivery within candle 2? Right? When we get this closure, we don't, right? Because we're right here. So what's the next thing we have to do? If we say no, now we have to wait for the intracandle or for the change in the state of delivery. Here we get that. So now we're in the flowchart, we're like this, that, right? So then now what does it say? We can look for those entries in the higher time frame candle. So now in this candle, I can be looking for entries, right? We reach up into here, close below there. I don't expect this high to get taken, but it's a little late in that candle, right? So that's where I like to wait for the next candle. Here, I personally wouldn't be considering this an opposing candle unless we have SMT here. I'd rather reuse this level. But when we have an SMT with GU here, that is valid enough reason for this to hold. Once we close below there, that is a valid entry. So I would say, yes, you have everything here. And the most important part is you followed the system, you're using your higher time frame candles, and you're looking at the areas that price should respect, right? So when you mark out 0.5 here, that's great because that's where we want to see price respect. So I would say that is completely valid and a way to look for candle 4 continuation, right? So awesome job there. I see your video on intraday bias on YouTube. You start from the higher time frame and drop to the low as 1 minute to trade the higher time expansion rather than 2R. I was wondering if, yeah, so a lot of my older videos on YouTube, a lot of it is more illustration processes. The only thing I would take away from that video is higher time frame candle closures give you bias, right? Focus on what I teach in the course in here. Is there any volatility drivers at specific times for oil, gold? I would watch out for crude oil inventories, not holding through that. Besides that, it's 9 a.m. I think open for those. Well, you get some volatility. Mainly it's just the New York session. So what we can do is I can go to CL here. And I can just put on an indicator. Hourly, oh, it's right there. Hourly ranges, go to the hourly chart. And you can see when do we have most of our range in oil, right? 8, 9, 10, 11, right? So that's what I focus on, right? And if you now notice, when we came back to oil here, what were we talking about earlier? Let me get rid of this, right? Oil had a small wick, a reversal off previous day high. So then trading that back into the range, that works. RB should be going, but not as aggressively, right? Just because it has a little bit larger of a wick, right? Cool. I found a good practice is to make a withdrawal covering the cost you paid for the account. Then regardless what happens, you put the time in the pass. Yeah, covering your cost is important. How do you tell the active candle is behaving on PO3 to get open high, low close, or open low, high close? So that's all going to be dependent on your bias. So let's go right here and we'll go to oil because this is just a live example we can go over. So why I was talking about this reversal on previous day high here is oil retched above previous day high, made a wick, right? And then had a change in the state delivery on the hourly. So the way I was viewing this is because we have formed a reversal off previous day high, I was viewing it as open high. And then that's why I was talking about it trading back into the range because open high, go lower to the close, right? And that is honestly where I'd kind of expect most of the range to be in. We'll see if it really wants to go lower. That's where I would anticipate it to go. But the whole idea of, okay, is this going to be open high, low close, or open low? Let's say it expands higher and then close. That's off your higher time frame bias, right? That's it, really. So if I'm bullish, right, and I see price go open, go lower, and then have that change in the state of delivery, I'm expecting this to hold as that's the wick of the higher time frame candle to then go trade higher, right? Versus something like this, where we have a previous day high, right? We open, we form a reversal off of that. Now I'm expecting that to go lower, right? And so if we look at this today, I'm going to the hour just because it's a little cleaner in my eyes. We have our previous day high. We open. We don't really form a low at all. And my bad. Then we get the reversal, right? Now, I prefer not to trade reversal days and trade the continuation days. The only time I'll ever look to trade a reversal day is when we have a small wick, right? So when I would visit AM section on that about that. But hopefully that makes sense for that example. I did not get an entry in candle 3 because there's no shallow run higher at the opening, but thanks for reviewing. All right, yeah. I mean, that's perfect to demand stuff you need, right? There's lots of times where I'll miss trades just because I wanted something to happen and it didn't happen. Oil just died. Yeah, just saw that thing. If bar 2 doesn't form a CISD on the lower time frame chart, but during the formation of bar 3 a CISD is formed, is that a valid entry point? Yes. So John, if you go through the flowchart, I'm just going to go to where I do the graphic design for these courses real quick, and I'll give me a second to load, and then I'll grab the flow chart so everyone here can see what I mean. Sorry, it's taking a second to load. Right here. Okay. So here is an example, or here is the flow chart. And so with your question, you're saying, hey, if I don't have a change in the state of delivery in candle 2, but it happens in candle 3, is that valid? And why is my answer yes? Well, first off, we always need an idea. And that's what I mean with a higher time frame bias or a point of interest or a draw on liquidity. But do we have a higher time frame candle closure? We do have a higher time frame candle 2 closure. That's what you were meaning. And then you ask, okay, do we have a lower time frame CISD in candle 2? Here you're saying no. So we go to the no section, right? So from the no, we look, is there a lower time frame change in the state of delivery in candle 3? Your question was asking about that. So I'd say yes. And then what does it say? I can get my entry within the current higher time frame candle or candle 3. If we don't form that lower time frame change in the state of delivery, what does this mean? This just means consolidation. So the way I have my flowchart set up is if this is going to occur, we're most likely consolidating, and that's why I just won't look. Does that make sense, John? Hopefully. Yes? All right, perfect. Of course. So reference point for PO3 is previous higher time frame candle. Yeah. So I'm using the higher time frame candles and the phases of price delivery, right? So if you go back to, you can go watch the recording. We were briefly talking about oil, and I was saying how this was a consolidation. So if we swept it out, I'm not like interested in trying to long above this. It's more so looking back into the range, and the area I drew out was looking for price to trade back into the equilibrium of this range, right? So then that's kind of, it happened while we were on stream, which is good because we can talk about it. How did I learn all of this? I never learned anything from Raja Banks, but where I learned was I learned auction market theory and order flow. I learned the strat, which is still incorporated into my model. I learned from ICT, but mainly I learned from the MMXM trader and AM trades. So funny enough, AM trades taught me a lot. Well, enough for me to go learn it or go on myself. What do you rather enter on when price is at your manipulation form an entry but is late in the candle or doesn't give you a manipulation but wants to give you an entry early? I'm a little confused on what you mean there. I prefer to enter early into the candle in my expansion candle. Let me read it again. When price do your manipulation and form an entry. Okay, so I don't like to enter late in the candle if that manipulation occurs. For example, what he is meaning here, now that I reread it, see if I can find one, or I'll just do it, is he's saying, okay, here's candle 1, candle 2, and then here. So vertical lines, here's candle 1, there's candle 2, and then he's saying candle 3 is like that. So I want to be entering candle 3 early into the candle and near the opening price. Let's say our manipulation he's saying occurs here. Would I enter this? No, I'd rather just wait for the candle 4. If this occurs in candle 4, then I can have this stop. I can trade that higher. Right, I'd rather wait for the higher time frame open. The second part of your question, I think that I don't know the second situation you're talking about there. You guys are trolling in chat. That's funny. I was able to grab this NQ counter trade based off 15-minute, 1-minute candle 3, but I failed to scale in through my 2R off. Any advice on how to adjust or stick to the original 2R around 11:15 time? Let's go take a look at NQ. Go to the 1-minute. Said 11:15 time. So you're trading this. So in here, The only thing here that I don't like is when I'm going into this trade, I'm not really liking these equal highs. I would prefer this have opened up, swept, then get on side with the move down to these lows. But once we do close below this level, I'm still not a fan, but you took your entry in here. Let's go take a look at your entry again. Right in there. So do you take your entry at the open, candle 3? So I'm looking at your first entry and I'm confused if you're entering that on the close or at the open. Okay, cool. So you were entering here. So the thing is, if I'm entering right here, I need to give myself a little room on this stop. And the reason for that is if I'm entering on this open, right, the way I view it is price could still trade up into here, and that'd be valid for me, right, if we're respecting 0.5 of this. Until we close below here or get displacement lower, I personally just want this swept out. So if I'm entering this on the open, my stop needs to be there. Once we go and close below, sure, then I can move my stop to here. Still not a fan of equal highs as a stop loss. But there with the add is I have reduced risk, right? So if I've reduced my risk and my stop loss is still here, I can add to my position, right? And then if I add a few to my position, my average position is going to be somewhere in there. I can add until my original 1R. And then this, even though it is already right around 2R, it's probably going to be somewhere around 3R or 4R with those adds. So I guess with your question, it's a lot easier without scaling in. Or if I prefer to add to my position, for instance, if I'm trying to add to my position here, I'll just use this as an example. I'm waiting for a new invalidation. So I'm not a fan of this price action, but just as an example, if this was going to be my new, I just pressed the wrong button. If this was going to be my new invalidation and my original stop loss was here, right? Or somewhere in here, I can then move my stop loss to here, which means I could add to my position until I'm risk-free on the trade, right? And then that comes and stops it out because it goes. I'm just not a fan of this lower time frame formation in there, but that's what I'm trying to show is if I have a new invalidation, then I can be looking to add. I'm not trying to just add because if I add in here, my risk skill has to be up here. Am I adding risk to my position? I'm not trying to add risk to my position. I'm trying to add to my position without adding risk, if that makes sense. Let's see. I took this oil entry. I was talking to some of the guys about this chat while we took it forming. I missed the circle to continuation valid setup. Yeah, that's a completely valid setup in candle 4. So let me, or I can just go to it. What time frame? Can you, if you guys send screenshots, can you include the time frame stuff like that? It just really helps me if I'm trying to like refer back to it or look it up for you because I'm trying to see when you took your entry. It's just very hard for me to see when you took stuff if I can't see the timing. Oh, it's 5 minutes. Okay. So let me go back to yours. Okay, yeah, that's a lot better. Thank you. Because then I can see the timing and the time frame. So you're saying you missed that one. This one in here. I mean, so here's the thing is I think I would have missed that one too. Unless this candle. See, I would have missed this entry most likely as well. And I wouldn't be looking to take this as a refill. And the reason for that is if I'm trying to trade this lower, generally I want to have this validated in there, right? So if I'm going to try to trade this, I would have wanted this to close a little lower, right? To then trade it, and I could put my stop somewhere above there, above the mean threshold of those, and then look for 2R. Once we take out these lows here, I'm not generally interested in an aggressive move back up. I would rather let this form, right? And if we close is decent, right? Or still bearish, which this one did, right? Then look to trade the candles following. Because if we get a retracement or consolidation in this candle, I'm going to wait for the new open of the next. In which case I can look to get on side with that or any of these in here. So most likely actually that in there, that in there, and then it just goes, right? So that's a valid continuation entry. The main thing is, so here's the entry he took somewhere right in here. Let me double check. Took it on the close below there. Yep. So the main reason with this entry, why it works, is you have your stop loss placed well, right? You're not trying to jam it too tight, right? So you're putting your stop loss on the technically validated high, and you're choosing the right series of up close candles. So yeah, that's a valid continuation. Took a loss on EU here. How could I avoided it? Looks like you were trading 6 a.m. So what we're going to talk about here on your EU trade is mainly the structure of the lower time frames. And I would say in your journal, it seems like you have the higher time frames decently figured out, but focus on the structure of the lower time frame. Is that the right timing? 6 a.m. Oh, I see. You took a loss in here. Okay. So yes, this is valid, right? Because we're reaching, that looks like a higher time frame fair value gap. Or is it? Let me double check. This could be 2 fixes for you to talk about. Okay, never mind. It's valid. Right, 5. Okay. So the main thing we want to talk about here is we want this to close, or just here, when we have a structure of our lower time frame, right? If we have a reversal candle, what we want to see is it's basically the power of 3, right? So my model is built in power of 3. So we have a consolidation or some sort of move. Candle 2 is my reversal candle, right? So generally in this, I want to see that V shape where it goes aggressive up, aggressive down, and I'm met with that, right? I don't really want to see price just kind of consolidating or do anything like that. So if we go in here, this isn't very aggressive to me, right? This is just I'm viewing this as like, okay, just a little consolidation. This is just more so consolidation to me, right? And if we notice, this first candle reaches quite a bit higher than we'd normally like, but it is still a valid entry mechanically there, right? So you could enter there. I would personally, if I was trying to enter this and I wanted more extra confirmation, I would wait for this to form a new opposing candle off this fair value gap. But the main thing I want to point out here is look at this structure compared to the next structure, which works out. So we'll get in here. Right, so if we take a look, see this structure, right, versus something like this. You see the difference? Which one has that V-shape reversal? And the way you think about it with a V-shape reversal is it's aggressively breaking out. And what that does is it draws people in who are trying to trade breakouts, right? So anyone trying to trade a breakout here is seeing this as, oh, it's starting to rip. I want to chase this. I want to get on side for this move higher. People are in here. What happens when price moves away? They're going to have to offset their position, right? Because if they're long up here, they're either going to hold for a loss or they're going to have to get out, right? Or they'll get out, or if it goes lower. I can explain breaker blocks to you guys if you want into terms of mitigating positions. But if you see here, you see how much different the structure is on this reversal here, right? Versus a reversal there. But breaker blocks, I don't know if we want to talk about those, but breaker blocks, all they are is people underwater offsetting their positions. So, does that make sense, Blazer King? Hopefully. I would say for you, focus on the structure of the lower time frame. So you want to see that nice aggressive shape or that V shape for a reversal, and that will give you that shooter or hammer candle. If you're going to have a reversal that expands in candle 2, it's going to have a smaller wick. So this is one where we have a larger wick, so then it's likely to expand in the next candle. Versus oil today, we go to the daily, right? Wow, daily and monthly, nice. The daily, we have a very small wick, right, which allows it to expand today. All right, let's see. If it's difficult to get a 2R trade from a setup, will you put your SL at 50% of the IC CSD? I'm never going to want to put my stop loss at 50% of the IC CSD. Let me talk about that real quick, because I see some people doing that. We'll go back to Euro. We'll go to the 5-minute. For instance, if I want to see price respect 0.5 of these opposing candles, where is it invalid? It's invalid if it closes below here. There are many times where price will come and touch this level, respect it, and then trade it higher. So I would not want my stop loss right on that, right? If anything, I want it below it. Safe practice is below the body or at the swing lows, the safest practice, right? So I'm not trying to put my stop loss right at the mean threshold of that, because that's really where like I prefer the entries. So for instance here, right, when this closes over, I'm expecting the upper half of this to respect, right? I don't want to have my stop loss right here. I want that below there or below there. But if I can't get 2R out of a trade and it's going to be causing me problems with a stop loss, something like that, I'm just letting that go. See you, Donnie. What entry do you prefer, or do you just skip both? Let me take a look. TST, I would really try to find some higher time frame candle indicator that you can put on the side. It's just really going to help me for marking these out. But I'd prefer the first one, because the first one is below the opening price when you're bullish. And the highs to the left haven't been taken. You see on the second one, highs have already been taken and it's above the opening price. Breaker block. Let me see if I can find an example. This is like when you understand mitigation, stuff like that, that's kind of what happens. So we'll talk about it here. We'll just find an example. So for instance, think about it this way, right? Just pretend you're always trying to trade a breakout, right? What would you be trying to trade below this low? If price went and took it out, you'd be trying to trade lower, right? So let's say I'm in a short position, right? And let's say I just don't have a stop loss, right? Because I'm just like that, okay? This isn't the best example, it's just one on the chart. So when we go and take out the highs, right? I'm like, oh crap, man. I'm like way underwater here, right? I want to get out of this position. Well, where am I going to try to get out of this position? My break even, right? So when price comes back to my break even or below it, right? I'm like, oh, I want to get out of this position. I offset my position, right? And that's where, let me find a better example, but that's where this is the breaker block, right? And so then once we close below it, which we haven't, but that's where people offset their positions. Let me find one that actually makes sense. You just have to think of people in the market getting screwed over and how, like, what's most likely to screw everyone over. That's how the market's going to move. Man, I don't even use breakers anymore, so they don't pop out to my eye. We'll do something like that, sure. It's not the best example, but let's say someone's like, hey, I'm going short here from over here, right? They're short in this position in here, where they started to build their short position, right? And they see it go like that. They're like, oh no, we're in trouble. I'm trying to get out of this. break even, right? Or I'm just holding this. It starts to go lower and they're like, okay, I'm afraid of getting out of this position or like losing this position. So then they start to set their stop losses break even or whatever, right? All your breaker block is people offsetting those positions in there. I prefer mitigation as a word, but not the best examples. But basically the thought is this, right? If you have someone trading this breakout lower, right, and they're entered at a sell stop in here, right, and then price goes and takes out this side of the range, they're way underwater, right? So if price returns to this area, that's why they want to get back out, right? So they get back out there. If they're buying back their short position, that buys back into the move, right? So if you've ever seen my like box setup video, that's all that is it's just deviations from the range, and then when you retest that deviation, I expect there to be some sort of reaction. And I do that a lot more on stocks. I just trade deviations from a range. That's really it. So like, I don't even have an example, but let's say someone is trying to trade this breakout here, right? Then they're underwater, it comes back to their break even, they get out. Really not the best examples, but can I talk about A+ setup? Sure. So my A+ setup would be a candle 2 closure, and then in candle 3, this is what happens on the lower time frame. Is we have our candle 2, and then here's our candle 3 open. So let me draw it out. Say our candle 1's in there, candle 2, say something like this. Let me adjust this a little. Right. It's not going to be a perfect drawing, but we're in candle 3 here. My A+ setup is going to be, I'll adjust this a little. We have our change in the state of delivery here. We have a swing low right above it. We're starting candle 3. Candle 3 reaches down, sweeps out this low into the change in the state of delivery, forms the change in the state of delivery, intracandle change in the state of delivery, and then from there, expansion higher. That's like my A+ structure. So yeah, exactly. It's just trapped buyers and sellers. Order flow. NQ has a breaker block at 910. The price came back to it afterwards. People to break even. Yeah, it's essentially mitigation. It's just offsetting orders that are underwater. Same as a unicorn. I mean, the unicorn has to have a fair value gap. I don't care about fair value gaps in here. The only thing I'm interested in is the structure of this with a nice V shape. And then the main thing is we're sweeping out a low at the timing of this new higher time frame candle, because this right here is forming the wick of candle 3 there. And the timing of it is like a Judas swing, essentially. That change in state of delivery confirms this wick, and I can just trade this higher for the rest of the candle. Where would I enter? So I have a few entries within the entry section of my course. Like I said in the beginning of this video, the first entry would be a candle closure in here. I stop like that, right, to trade it higher. That's higher RR, but more risk. I really only do that when it's very confident in a low holding. The other entry would be once we close over this, stop like that. And this is my more preferred method. Can you review today's NQ price action 930? So I wouldn't have really been looking for NQ this morning. I talked about that on the higher time frames, but we'll go ahead and go over it. If I wanted to trade this, where would it be? Well, let's see. It would have to be in here. Not a very clean one, but if price is going to respect this, I want to see 0.5 of this little wick. I'm not a fan already. The reason is this went pretty low right? So if we replay this, this isn't even a valid setup until we close through the down close candles that made it, right? So within my fractal model, there's no setup here until the highs are taken out, and I'm not interested in longing above highs, right? Like there's no setup in here until there technically, right? And you see there it prints, but we're already above highs. I'm not interested in trading this at all. So there's no valid setups for me on NQ this morning. And I talked about it on the hourly, why I wouldn't really be interested in longing this, because we have no established low to trade off of. We've just been moving higher, right? Maybe if we would have retraced into a fair value gap here, then form something, sure. But I just can't really justify, like I would not in real time try to trade something here, so. Well, it's not that we're at the highs it's risky business, because we're at the highs over here too. It's just this one we have something to our left to take out. And we already have made what I believe to be the wick of the daily candle in New York. So I expect that to continue into the close. Versus here, we've just expanded all day. So when we expand throughout the day, the analogy I have with this is we only have so much rope we can use each day, right? And what I mean by that is range and like time, right? So here, we don't really use much rope, right? And then we use it in the New York session to trade higher. Here, we're using all of our rope all the way before the New York session. What happens in the New York? Nothing, because we've already used all our rope. So your A plus has to be C1 as an OB on higher time frame. So I have like a A plus hourly setup, and then I have like an A plus structure on the lower time frame. But at the end of the day, it all comes down to the higher time frame setup, right? Like, for example, oil. This reversal doesn't look super amazing in here. So it's kind of max expansion, what I expect for today. This reversal in here doesn't look amazing, right? Go to the 15. It doesn't look great in here, right? But it's backed with some higher time frame understanding in a reversal of previous day high. So then it moves lower, right? So it's like everything for me is based off the higher time frame. Can do high time frame to low time frame setup. Don't really know what you mean there. I don't know if anyone has an example of a continuation setup. Or I think, what, USD JPY? Was that someone earlier? Nah. Yeah. I think so. All right, so here's an example of what you could do as a lower time frame to higher time frame setup. Is we have our daily candle here, having a candle 2 closure. And then, actually, this is not a good example. I think it's Euro JPY. Was it? Yeah, Euro JPY. I think. I don't know. There's one I posted on Twitter. But, I don't know. Does anyone have a good example on the higher time frame? Just that's good top down. But essentially all it is I'm going to have some sort of higher time frame continuation day. This is not an amazing one because it didn't really close great. But if it was, right, and I have this reversal here, right, then I'm just waiting for bullish swings to get on side, right? So this one wouldn't work because this never occurred yet, but bullish swings to go higher here. This is not an ideal candle that I'd try to get in on. Oh, silver maybe? I mean, this one could work, but it's still not one that I want to use in an explanation because I want to use a continuation day. So, or let's see. Probably go back to NQ here. Or yeah, NQ hourly. right, let's see. I didn't like that day because of equal lows. But for example, like today or this day, right? If I was expecting a continuation higher, we sweep out this low. And then I go to the 5 minute. Basically, I'm just refining my process. I go from my hourly to my 5 minute, right? Or my daily from my hour, daily to my hour to my 5 minute, right? And then in here, I want to be looking for longs in here. Do we have an intra candle change in the state of delivery? No. Do we have one here? Yeah, right at the end of candle 4. So then I could look to trade that. Right? And then it's very choppy. Right? So not a great example. Bitcoin. I've barely looked at Bitcoin other than to trade some options. We'll go daily first. I mean, I'm not the last time I looked at Bitcoin was in here, so we can go in here. This is when I posted about it on Twitter, was this low. But if you notice, we have a candle 2 closure, right? Added area or point of interest. I refine that to the hourly, right? Once I have this change in the stage delivery here, which it marks out, right? Then I could be looking for longs in here, which I could refine to the lower time frames. On Bitcoin, I don't like to refine because it likes to just sweep stuff randomly and then go. So I like to just stay on the hour. So, but that's like how you would refine it down. So you basically just repeat the process over and over because it's fractal. So now it's like once I have confirmed my daily, if I have an hourly swing point, then I can trade off that on the 5 minute. I don't like to go lower than the 5 minute, but you could technically say, okay, now I'm on the 5 minute. Do I have a 15-second entry? Thanks to you guys. See ya. All right, see ya, Ian. Bitcoin's getting clean setups. If I'm going to ever watch Bitcoin, I just use the hourly chart. The hourly and then the daily. Right, so nice little daily swing here. Finishes off, puts us into a new swing here. Mainly focusing on previous day's highs and lows. So I wouldn't be interested in this because we already took out our previous day high right there. Right? Versus here, you see how we leave that previous day low till a little later. How's it going, Shinobi? Shin? Tuesday candle 2 closure looked not too bad. Yeah, that one. Or this one? Yeah, so this is what I mean is, for example, my battery is about to die, so hopefully not. I'll end it soon. See how on this day, we retrace a little bit back up. We're still respecting 50% of that day, which is here. But we leave previous day low as a target. So then if I want to get on side, I can get into this low. Versus on this day, do we leave previous day high as a target? Like we take it within the first hour, right? So then now if we go and close below here or take that out, I don't expect this expansion to continue. We take that out right away. So now I'm just viewing this as chop the rest of the day. Right, maybe it goes, maybe it doesn't. I'm not really interested in it. So my Mac is about to die. We are at about an hour and almost 40 minutes. So I will end it here. I will apologize I'm not as active this week. I am moving, so it's been taking a lot of my time and energy. But I will be back to being more active next week. And next week you guys should have the updates to my course. That's the plan once I get moved. I'm going to be sitting on an air mattress with my laptop and cooking those out. So can you see my chart once? Oh, right there. I missed it. Your mistake here. Let me see how much battery I have left. Okay, I have 8%. Candle 2 structure formed. It would be very helpful, V3, 5, 6, 7, if you could do your own markups and then send it to me. Because that way it's easier for me to see what you're seeing and then I can adjust it. Candle 2 structure formed for 2 times after 10, 15, bullish, 1 bearish. So that's what I mean with you have to have a higher time frame bias. If you're just trying to look and capture every little swing high or low in here, you're just going to get chopped up an incredible amount. Right? Like, it's just, at the time, it would be that one too. Like, that doesn't make sense. what you want to do is learn how to refine these down. The easiest way is selecting a bias because that cuts almost half of these away. And then you want to also include a point of interest. Okay, here we swept out a point of interest. That removes that one, this one. That one's already gone from bias. This one we already took out previous day low, so I'm not interested. These are next day. And it's like now I only have 2, right? Looking short. So it's like you want to refine and figure out which swing points you're actually interested in trading lower. This one I couldn't because it would be a candle 2. So now we're only left with this is my setup I'm looking for to trade the previous day low. So you want to have a higher time frame reasoning. So you mean to see the 1 hour? No, this is fractal. So whatever I just explained there, that's on any time frame. When you say you're going live at 9 a.m., what time in UK? So I go live at noon EST. I don't know the conversions off my head for 6 hours maybe. Is that 6 hours? That's what it was when I was in South Africa. So noon plus 6 p.m. or what, 1800, 1700, somewhere in there. The higher time frame bias is relative to your lower time frame. So if you're on the 15 second, a 15 minute or an hour is pretty high time frame. Versus I would always personally focus on the daily chart because the daily chart is just what I have found to be the best in determining bias because you're trading the whole day. Like if you're trading intraday, you're trading in that candle. So, but with that, my laptop is about to die. So I will end that. One last question? Sure. And these happen. You can ask all these questions in chat and I'll get to them as well. I just don't want the OBS. I'm going to end the OBS so it doesn't